All right. Welcome, everyone. Welcome. Thank you all for the amazing comments so far and the likes. You guys are just doing that automatically now. Thank you all. Welcome, Adriana. Hello, Joel. Seems like people are still coming in. Awesome. Welcome everyone to the YouTube channel here and to this live stream. Good evening to everyone. Okay, so seems like people are able to hear me. I mean, my settings are the same as yesterday night, so you guys should have no problem with hearing my voice and music as well. So, as per usual, give me a thumbs up if you guys can hear me correctly. You guys should be able to hear me correctly, hopefully. We can hear you. Okay. Perfect. All right. So let's talk about FOMC minutes. Okay. So what did they discuss the past 2 weeks? Right. I believe it's 2 weeks or 3 weeks. I think it's 2 weeks. But the FOMC minutes, they basically said the same thing that we've been anticipating and what analysts in the market have been anticipating, like Wall Street has been anticipating. I mean, they just officially, officiated the fact that they're really going to go at it at inflation. They're going to attack inflation, which makes sense, right? Because they want to make sure that they let the public know that they're willing to do whatever it takes to correct their wrongs, right? Because the Fed treated inflation as a temporary inflation, right? And they focus on the labor market only. They're focusing on keeping the unemployment rate down. And now we're down at literally no unemployment because, if you guys have studied economy before, the average percentage where we consider the economy to have no unemployment is below 4%, right? And it's around like 3.7, I think 3.5. I don't remember. I don't know the exact number, but when the percentage is below 4%, that's usually a very good sign. And usually we just generalize it as, there's no unemployment, right? And right now we're staying there, okay? And the Fed did what it needed to do to really help the labor market come back after the pandemic, right? But as they were continuously pouring liquidity, right? They're providing liquidity to the markets and pouring money and printing money in the markets. They start to have a lot of, they start to push equity markets higher and higher to the point where, the market shouldn't have gone too high, right? That high. And the fact that they've pushed the markets higher kind of artificially just through the printing of money and just pouring a lot of liquidity into the markets, right? We're now seeing their fault at doing that. Okay, so hello, welcome everyone. Commander Sparky, I like your username. Thank you for saying hello and welcome to the live stream. So, with Fed here, with the Federal Reserve, I like the fact that they're getting, they've officially said that they're going to do whatever it takes, and now they're going to be raising hikes even faster than anticipated, right? But we already knew that, right? I mean, everyone was saying that we're gonna get, 8, 9 interest rate hikes, and we're gonna get them very, very quickly in succession, right? And we might even have 5 or even 7 interest rate hikes before the year ends, right? So, we've been anticipating it. We just need to actually hear it from the Federal Reserve, and we got that today, right? They said, okay, we will fight inflation and we'll do whatever it takes. We're going to increase interest rates as much as possible and as quickly as possible in succession with each other, right? So, same thing. They just officially said it, right? That's basically what they did, okay? And the markets have been, so far, right? This entire downtrend here so far, let's look at the weekly time frame here. From all-time highs here, right? this entire downtrend, right, has been pricing in basically the federal interest rate increase, the rate hike, and how many rate hikes we're gonna have, right? So if you guys weren't part of the Saver Single Watch, I told my members that, you know, in succession that how many interest rates that we're gonna get is gonna be important, right? And then after that, after we get the official number, or, you know, at least a range, right, from the Fed, the next most important thing will be how fast are we going to increase the interest rates, right? And so, you know, this is kind of the chronological order of what I wanted people, my members, to focus on, right? And we've been very spot on that as well. And then now the third thing that I want us to be looking at, right? Now that we have the how many times that we want to be raising interest rates and how fast we want to you know, raise interest rates, right? The next thing that I want everyone to look at is, well, how much do we have to, you know, increase the interest rates quickly, right? How fast do we have to increase the interest rates to see a decrease in inflation? So basically, I want everyone to start looking at the inflation now, right? Because inflation should start seeing some dent into the ever increasing percentage every single month, right? The core CPI and the CPI numbers just keep on going up and up and up, and we just saw a nice little tiny break for the month of April, right? So I think we went down. Actually, I don't remember the actual numbers here, but I think we went from 8.9 to 8.5, I believe, from March to April. But whatever the number may be, we just know that we went down from March to April. So what the Federal Reserve is doing is going to work, right? Just that's a little tiny glint of hope, and you know, based on how, you know, aggressive they do this, right? And they said they'll be aggressive, okay? The market should react accordingly, and the CPI number should react accordingly as well, with the Federal Reserve's hawkish statements. So today, okay, we actually kind of reacted towards that, right? Where the markets were saying, okay, so we got our, let's move my cursor back here, right? We got a confirmation that the Fed is going to be, well, hawkish, right? Very, very hawkish, not dovish, okay? Not like the Bank of Japan, where they're very, very dovish. If you guys don't know what I'm talking about, go take a look at my video, which is titled the four reasons why the stock market crashes. Okay, go ahead and take a look at that. It's a very, very interesting video. I highly, you know, wish that you guys see the whole entire video. Make sure you guys, it's about 30 minutes, almost 30 minutes. It may feel long, but there's a lot of important information in it that you guys have to know. And there's a big surprise of what I say at the end of the video as well. You might not like it, but because a lot of people hate this person right now. So you guys can go ahead and watch it. But with SPY here, we acted very, very well. We, you know, I told everyone that we don't want to be, you know, most likely we don't want to be trading today. But in fact, okay, we traded SPY and ARKK, ARK Invest. And if you take a look at the 15-minute time frame, right? We had a nice break today. Okay, it was a nice break. We got in around here, right? And then we exited around over here. Okay, we took a little bit, like, I personally took off half here, okay, and then I took off more right here, right? Obviously, I could have waited a lot longer until we retested 398. I'm pretty sure some people did wait all the way to that retest of 398. But the fact that we came back above the 398 level, which I've been stressing to everyone during the lives here, just gives me a great bullish stance that potentially we can continue to go to the upside, hit 400, and then hit that 405 level that I've been looking out for, right? But we also can't forget on a 2-hour time frame here, right? We're still building up, okay, this rising wedge. It's this very, very sharp rising wedge here, okay? So let me actually use this trend line here. Bam, bam, bam. There we go. All right, so roughly, right? So we had a little tiny peak, a little tiny peekaboo game today above this, you know, I've also been stressing this the past few weeks. This descending daily channel chart pattern here, right? It's on the daily time frame, but we can also see it on the hourly time frames. And we had a nice little movement out of this descending channel, and the fact that today we didn't immediately reject off of it and we kind of held around that resistance level here, this one, right, gave me more confidence that we can see a nice follow through during power hour and after the FOMC minutes were released. And in fact, we did that, right? We broke out of this descending level of resistance, okay, and we came back up above 398, came back down, retested the previous level of resistance, which is this descending level of resistance, right, and bounced as new support, which is always great. We want to come back down and retest the previous level of resistance, which was our initial breakout level, because it gives us confirmation, right? It gives us confirmation that we can go higher, right? So with SPY here, I expect us to move higher tomorrow, okay? But I'm going to be very cautious because of the fact that we're still staying in this rising wedge. Now, with this rising wedge still, right, if we decide to retrace all the movements from this entire downtrend, right, because this is our flagpole, right, and this is our flag, right, the rising wedge is part of the overall macro bearish flag, and a bearish macro bear flag here has this micro rising wedge, okay? So if we decide to retrace all the downtrend movement that we made from this flagpole that we made, right, and we've been doing that so far, we're more than half, we recovered more than half of the losses, way more than half here at this point. We have about, I would say, around like 25% left of the move left here, right? Just based off of the size here, the size of the movement here, right? We have about 25% left, or maybe yeah, like a fourth left from this downtrend. So if we're able to retrace all the way back to around, I would say like 42.50, there's a good chance that we can see that retest back to 405, which is our juicy and meaty level of resistance, where we'll see a lot of sellers coming back in, right? You know, how do I know that? Well, right here and right here, right? There's two significant areas where we see this 405 level. Dion, good evening, right back at ya. So, you know, FOMC minutes, the markets, I think, reacted well to it, to be honest. There really wasn't anything, you know, different as well. So, you know, with FOMC minutes in the market, I think the market is just now kind of tired of hearing the same thing over and over again. And the fact that we actually got an official statement from the Fed that they'll be acting aggressively towards inflation and lowering that inflation back down to the 2% target, I think is a great sign for the fact that the market reacted positively to that. So tomorrow, the only follow through that I want to see, okay? So here's my action plan tomorrow. So listen carefully, guys. We need to break above 398 and never come back down 398 again this entire week. Okay, so let me repeat that again. We cannot go back down 398 once we start to hold above 398. Does that make sense? So that's the condition. If we break above 398, okay, let's say multiple times, and we hold above 398, we cannot come back down, because if we come back down, sellers will most likely come back down again, and we can see another break. And this rising wedge, or this macro bearish flag, will be completed, right? It would have done the job here, right? So if I'm bullish tomorrow, if I'm completely biased to the bull side, right, to the bullish side, to the upside, I want us to stay above 398, go above 400 and stay above 400, and continue to 402.50. Right, and if there's enough volume tomorrow, right, there's enough volume, and there's a lot of, you know, FOMO people, FOMO buyers, who did not trade today on this nice big bounce, right? Nice 3+ point move here. They're gonna get in tomorrow, and we can see a nice big push towards that 405.10ish level, okay, or just 405 level, right? If you guys want to be using whole numbers, but like I said, 405 is the ultimate level for this week. I want to see 405 by the end of the week at least, right? And why? Well, because I want to see a nice weekly green candlestick printed, and guess what? We're already seeing that. We're done with the half of the trading week here, right? So I want us to see, right, a nice green candlestick at the end here, at the end of the week, right? If I don't see a nice weekly green candlestick printed on here, then we're due for another pullback, and that's gonna be a 8th completed week of, well, pulling back, right? So, the more we go down, though, the more, probability, the higher probability that we would get for a bounce, right? And the odds will be in favor for longs instead of shorts. Does that make sense? Right? And if you take a look at the weekly RSI, right, we're still pretty weak, right? We're around 35. We're not completely oversold, but we're still very, very weak price action. And the odds are in favor for a bounce, and we're getting that right now. The only thing is we need to see a lot more volume injection for the next 2 trading days, right? So in order for us to potentially, like I said, reach 405 by the end of the week, we need to see a lot of volume. Does that make sense, everyone? Okay. So far, futures are very muted. Nothing's happening right now. If I take a look at ES here, let's take a look at ES first. Okay, on the daily time frame. Okay, we came back up and retested the 10 SMA. Perfect. That's perfect for reversal. And for today, when we opened up a little bit below the close of today, and then we just decided to pump and try to get back above this decent level of resistance. But we had like a little tiny of a, I wouldn't say it's a double top, but it just basically, there's a lot of sellers at this decent level of resistance on the futures time frame as well. So, I would say that based on tomorrow's action, if we're able to break out of the descending level of resistance as well, and we're able to go past 4,000, which should translate to around 400 on SPY, there's a good chance that we reach 4,050, okay, which should also translate to around 405 on SPY. Does that make sense? Okay, so right now we're retesting the 10 SMA, right? We're coming back down. Okay, and if we hold, now this is the most important part. If we hold the 10 SMA, and let's say we come back down overnight, and then before market open, okay, so before the equity markets open in the US, I want on ES here on SPY futures, I want the price to be above the 10 SMA by the time we're open. Okay, and if we're not, most likely we're gonna have a bearish market open. Okay, so just based off of the 10 SMA here, remember, this is my momentum SMA. It's going to signify whether or not we're going to see a reversal to the upside, or we come right back smack down to the downside. All right, so I like the fact that we closed above the 10 SMA, but tomorrow is the confirmation day where we decide if we want to hold above the 10 SMA and continue to bounce above the 10 SMA and move away from it and move towards my next momentum SMA, which is my 21 SMA. Right? Do you see how I have a very methodical and logical strategy here? Right? I want to see how the price is going to work out in the near-term future based off of my technicals, based off of my SMA indicators, based off the price levels, and etc. Okay, so that's basically what I want to do. That will be my ideal situation as a bullish bias going to the markets tomorrow. So we just have to, like I said, fully retrace the losses that we made here back in May, right? Like on SPY, like I said, right? We want to see complete retracement of this sell-off that we had, and so far we are way above the 50% retracement here so far from this lawsuit that we had. So there's a good chance that we completely 100% reverse the losses that we made a few weeks ago. Okay, so excuse me, not a few weeks ago, a few days ago, right? A few trading days ago. So it's kind of at this point, we just have simple levels to play with. There isn't much to look at in the overall markets because everything is still very low volume. A lot of investor confidence have been it's disappeared literally overnight as people sell their stocks, or people just don't come back and don't look at their portfolios at all anymore. So with this low volume, and for the fact that we're heading into summer, and for the fact that the markets are now, there's not enough well, there's still liquidity, by the way, in the markets. I mean, the Federal Reserve literally injected trillions of dollars worth of liquidity into the market. So, I mean, it's not going to go away just like that. So, I wouldn't expect liquidity to just disappear overnight. But for the fact that the investor confidence has disappeared from the public, right? And for the fact that we're heading to summer, where usually it's sell in May and go away, right? That's the cliche saying in Wall Street. No one's gonna be buying, no one's gonna be trading. So usually the volume decides to kind of fall off the cliff. But it'll be interesting because with the Fed going really, really hawkish, like never seen before in decades, right? They have a lot of room to really move the market still. So depending on tomorrow, like I said, if we decide to break above 398 and retest 400 and somehow see enough volume to pass 400, hey, 405, okay, could be possible by the end of the week. Right, I'm trying to stay positive here now, and once we kind of see a strong rejection at 405, we may just start to continue the downtrend again. Okay, very, very simple plays here, right? Nothing hard, nothing too complicated. Just focus on these whole number levels that I'm giving to everyone, right? So just keep it methodical, have a good risk management plan, have a good preparation with your game plan, etc. Okay, that's basically all you need, right? Keep it simple because the market's already hard, right? So that's kind of it for SPY here. There's nothing much to look at for SPY. That's basically it. I think if you guys are wondering what my bias is for tomorrow, I'm slightly leaning towards the bull side. Like I said, remember, I want to see a bounce. I need to see a bounce, all right, in order for us to confirm that this downtrend is indeed going to go lower, right? I need this week to be a nice green weekly candlestick. If it's not, well, very unhealthy downtrend, right? 7 straight weeks of going down. And then if we decide to end up with a nice bearish candlestick again, a nice inverted hammer candlestick maybe, well, there's an even higher chance that we're going to see a bounce on the next week. Okay, so I'm glad that we're seeing a nice weekly green candlestick so far already, a nice healthy one at that as well. So hopefully we stay like this. Okay. So the next kind of name that I want to look at is an individual stock is TOL. Okay, so this is a home builder stock, right? If you guys don't know, I was looking at XHB, right? This is the spider sector for home builders, okay? And this is kind of choppy. It was a great short below 60.50. I had a short for BLDR, right? And this is a great swing, right? I take profits here, but I told my members to take profits on the same day in case people didn't want to, not the same day, the next day, people didn't want to hold, right? And since this name is very, very choppy so far, I'm glad if they did, because, well, if you have choppiness and just complete sideways movement, it kills the option premiums, right? Especially if your option is not in the money yet. So BLDR was a great short, but XHB so far has been proven to be very, very choppy so far. So, choppy while going to the downside. So TOL here is a lot less choppier. How? Well, because we're starting to form a nice base, right? Pretty solid base here, right? And if we continue to build this base, and based off the huge volume after we had earnings, I think, it was yesterday afternoon, right? After the market closed, it had earnings, great numbers, and today we just absolutely started flying, right? And for the fact that we came back up above major SMAs of 50, 10, 21, right? All of it together, all three together, and we closed above it. There's a chance that we can actually break above tomorrow, I would say above 49 will be a confirmation here. Okay, so around 49.10ish will be a nice confirmation for the fact that we can go up higher and possibly retest the daily 200 SMA. Just remember though, the overall sector is still in a downtrend, right? Heavy downtrend. Let's see, HD is in a downtrend, right? Lowe's in a downtrend. Okay, like I said, Builder, Okay, and I think CF is also a home builder as well, if I'm not mistaken. Oh no, this is chemical and agricultural. Never mind. So you know, just based on the trifecta of individual stocks here, like BLDR, HD, right, low, they're all in a downtrend. Okay, so you know, if TOL decides to act individually and act inversely to its own sector, hey, why not? Okay, it's basically, that means that the stock is going to decouple from its own sector, right, the home builder sector. Okay, let's also talk about Nvidia here. So Nvidia is down. All right, so Nvidia had it wasn't surprising. I believe they highlighted here. Let me see. It should be here. Yeah, like okay, yeah, see right here. Just based on the numbers I just saw, it's nothing too overwhelming. It's very underwhelming quarter, like it says here. You know, it's they're basically having the problems, like I said last night in the live, that this stock is going to still feel the wrath of the supply chain woes that every single company in the semiconductor industry is facing currently right now. As not a bullish indicator anymore, with still growing demand and the fact that the supplies are not being replenished. Right now, it's a huge problem because they can't fulfill people's orders or even their huge clients' orders. And what does that mean? Well, lower revenue for that specific quarter, right? So, for the fact that we had such underwhelming numbers, and it wasn't very surprising, right? Because we know that the semiconductor industry is facing a lot of supply chain issues. And they're getting squeezed here. They're getting it's a bottleneck squeeze of supplies. I think even with Nvidia as a leading semiconductor industry, they still did well. Okay, I'm not saying that they did bad, but they're also struggling, which should also, provide a precedence to the other smaller or even the same sized semiconductor companies, right? And especially for the smaller semiconductor companies, you can obviously assume how worse that they might be doing from this semiconductor supply shortage, right? So, with Nvidia, they're barely scraping by, is what I would say. Barely scraping by. Investors did not like how Nvidia was handling the supply chain issues, I guess, and decided to sell off. And I think we ended up around 155, if I'm not mistaken. Maybe 153, 154. I haven't checked the last time when the market closed at 5 p.m. PST. But Nvidia, negative reaction. AMD had a parallel reaction. I think AMD went back down to like 90, I think. So it raised today's movement completely. And yesterday as well, I gave you guys this AMD here, and the fact that we're seeing a nice broadening rising channel here. Okay, and this is bearish as well. Well, first of all, right, if you just want to keep it simple, bear flag, right? Flag pull and then bear flag. Flag pull, bear flag. Very simple, right? So, if it decides to break down, okay, the semiconductor industry will be very, very bearish tomorrow based off NVIDIA's earnings. Okay, so that's kind of it for AMD and NVIDIA there. Other name that I wanted to look at was, so Twitter. If you guys don't know what happened to Twitter in after hours, it was announced that it was revealed, or announced, same thing, that Elon Musk is going to make sure that this deal goes through, right? And people are really, really getting antsy here and saying that, the deal might fall through and Elon Musk might try to get out of this deal. But he just reassured everyone for the fact that he's going to go through with this deal. And so Twitter decided to pump all the way up to $40. I saw it at $40 at some point. So it's up more than 3 points there, or almost 3 points. And Twitter is kind of balancing out the market after our price action with NVIDIA's downturn movement. So, it's been a wild week, basically, right? Snap destroyed the market this week, and then we somehow came back, right? And then NVIDIA decides to try to destroy the market with its earnings, and then Twitter came back to save it, right? So I would suspect earnings to be a very, 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 very confusing and complicated, because companies themselves are uncertain about the future, right? They don't know what's going to happen, and they've been uncertain since COVID, and I mean they have every right to be, because with everything going on in the economy, in the markets, global issues, and etc. Who knows what's going to happen next? Who knows what's going to be the black swan event? Because the black swan event in 2020 was COVID, right? So who knows what the next one will be? Will it be an all-out war, right? It could be anything, right? Obviously, we don't want a global all-out war going on. No one wants to kill each other. No one wants to die, right? Obviously, people want peace, especially at a time like this when we're so interconnected, right? In a digital world, we try to understand each other more, but at the same time, being so interconnected has brought on a lot of divisiveness, basically. So let's see if humanity has what it takes to stay together and keep together its its current society, and not just blow it up into smithereens, right? So companies are very, very, very rattled, and they don't know where to go from this point forward. So they're just going to let the economy flow on. And yeah, that's kind of it for tonight, guys. One thing I do want to mention, though, the Federal Reserve keeps on telling us that the economy is robust, very, very strong, and the economy can take multiple interest rate hikes quickly in succession. Okay, I personally actually believe that, right? Based off of the unemployment rate, how strong the labor market is. The only thing is, though, and I've told my members this 2 months ago, in March, okay, that the fact that people are moving around jobs way too many times. Some people don't even show up to new jobs at all, and they already start looking for another one. It's kind of hurtful to, it's kind of hurting the labor market, right? Because we don't have solid numbers as well from the labor market. I think it's from the Federal Bureau of Statistics, or Federal Bureau of Labor Statistics, I believe. I don't even know the official name. But we want to see people not just moving around in their jobs. We want to see people keeping their jobs, right? Because that means companies are willing to keep people, right? But the fact that the companies are now slowing down in their hiring process, there's been a constant trend now of companies literally slowing down their hiring and trying to keep the current employees that they have, is kind of concerning, right? But I get it. Companies are doing that because things are uncertain for the future, and they don't know if they're going to see more rapid growth of their revenues, their reach as a company, and more clients, basically, right? So who knows, right? They're very uncertain, and just like us, right? They're very uncertain in the markets right now and in the overall economy. So let's just see what happens, right? After the Fed decides to do what they wanted to do, right? So if they decide to really increase the interest rates as quickly as possible, hey, the markets might even like that, right? It might be a positive. We already saw that today, right? And the only way, guys, that the market sees it as a positive is that they basically say, oh, well, since the Federal Reserve is really trying to fight inflation, maybe it's time to stop falling down to the earth, right? Because the Federal Reserve is, taking responsibility for their mistakes during 2020 and 2021, all right? And they're trying to save their face by making sure that they correct their wrongs, okay? And they're trying to do this as quickly and swiftly as possible, so that people stop seeing more pain in the markets. We touched a bear market, that arbitrary number of 20%, negative 20% from all-time highs. So, we'll see how it goes. And based on tomorrow, like I said, watch that 398 level, watch that 405 level, okay, watch that 400 level, and we're set. All right. So that's it, guys. There's nothing else much to talk about for SPY. I mean, I highly recommend that you guys only trade SPY tomorrow like we did today. We also traded ARK as well because I saw an opportunity. We also profited off of that. But with that, guys, I apologize, by the way, if I'm sounding like I have a really, really big lisp right now. I got my braces tightened last week, and it's still hard to talk. I mean, these braces with these with thicker wires, it's getting harder and harder to talk, and it's painful. So I apologize, guys, if I'm really butchering some words. I can't control it; it just comes out like that. So if I'm saying some funny words, if I'm kind of tweaking some of the words in a funny way, I'm sure you guys are having a great laugh, but I'm not doing that on purpose. It's just happening because of the braces here. So okay, so good luck to you all. All right, I'll see you guys tomorrow night as well. Make sure you guys use these levels on SPY to trade tomorrow. All right, if you have any questions, you know where to contact me: Discord, Instagram, or email. All right, there's multiple channels that you guys can try to reach me. Even leave a comment down below on this video, on this live stream recording once it's posted. You guys know the drill. And yeah, thank you everyone for the likes. Commander Sparky, when would be a smart idea to load on UVX? Okay, let me answer that question. I would say if we retest 405 by the end of this week, okay, and it may be prudent to actually grab some UVXY, and I've been actually thinking about that if we reach 405 this week, to hold UVXY over the weekend. But because why not, right? Because we're at 405. If we reach 405, which will also coincide with the 21 SMA, right? That's two bearish indicators there. It's a level, it's a resistance level, and this is the indicator to my 21 SMA. But the fact that we are reaching 405, if we do, that would be a great idea to grab UVXY calls. Okay, so I might just grab a lot of UVXY calls by the end of the week, Commander Sparky. Okay. Dion, I feel you, brother. I have braces for 4 years. Yeah. Luckily for me, I only need to do it for about a year or a year and a half. And the year is I'm almost halfway once we enter into June. So let's go. Let's go. Yeah, I should have gotten braces years ago. So, yeah. I don't think I have anything else to tell you guys except just that. I mean, FOMC minutes was interesting, but like I said, really wasn't surprising to me. I mean, everyone was so surprised. I was on Twitter and everyone's like, oh my god, the FOMC minutes came out. Wow, they're going to increase interest rates multiple times, and they're doing it as quickly as possible. Yeah, but we knew that months ago, right? Everyone anticipated it. The markets, right? The federal bonds rate market were pricing in that already months before they officially stated that today. Everyone seems to have a very short-term memory, right? In the markets, I mean, I don't blame them. The market starts to act like that too. So it's better to just have a cool head. Don't fall into conclusions right away. Read the whole thing, read all the information, read all the data as usual, right? Just like in this in the technical chart here, and then come to a good conclusion, right? So like I said, the Federal Reserve is going to continue its hawkish rhetoric, right? And whatever they say in a nice way, it's always going to have a hawkish overtone as well. So once inflation it goes right back down to that 2% target, they're not going to ease up. I just know that for sure. Okay, so remember, they messed up, right? They wanted inflation to stay at 2%, but they kept on increasing interest rate, and they thought that it's going to go away and come back down to 2%. But it didn't, right? Which is why we went from temporary to runaway inflation, which is completely their fault. All right. Okay. Have a great night, everyone. All right, I'll see you guys tomorrow night as well, around the same time, maybe a little bit later, since people usually tend to visit the live stream a little later in the nighttime. So maybe around 8 p.m. Pacific Standard Time, or which will also be 11 p.m. Eastern Standard Time. Okay. I will also announce it on my Instagram page as well. So, yeah. Thank you all for joining as well, guys. Thank you all for the likes. My God, 6 likes already. Thank you, everyone. Thank you. Have a great rest of your night and good luck trading tomorrow. Thank you for joining the live stream.